Datavault AI, trading under the ticker DVLT on the NASDAQ, is currently priced at 0.94 USD, showing a decline of 2.99% in today's session. While the broader market is watching familiar names like Tesla stock or the latest movements in Apple stock, Datavault is carving out a much more volatile and niche path in the microcap space. At first glance, seeing a stock drop nearly 3% might seem like just another slow day for a small-cap tech firm, but if you look at the pre-market action, the reality is far more chaotic. Earlier today, this stock actually spiked by over 26%, hitting highs around $1.23 before the selling pressure took over. This immediate reversal creates a massive gap between what retail traders expected after the morning news and the reality of the price action we are seeing right now. Most people see a headline about new patents and expect a moonshot, yet here we are watching the price slip below the $1 mark again. This disconnect is where the real story lives. It's not just about a simple price drop. It's about the market trying to digest whether this company is a legitimate pioneer in data valuation or just another speculative vehicle riding the wave of AI hype. The immediate catalyst for today's early surge was the announcement that Datavault secured two foundational U.S. patents focused on blockchain-driven content licensing and tokenized monetization. These patents are designed to automate how digital content is tracked and paid for, essentially using smart contracts to ensure creators get their cut without the usual middleman friction. In a world where NVIDIA stock dominates the hardware side of AI, Datavault is trying to own the plumbing of how that AI-generated or human-owned data is actually valued and sold. The curiosity loop here is why the market sold off such seemingly positive news. Usually when a company strengthens its intellectual property moat, you expect a sustained rally. However, the reality on the ground is that investors are cautious about execution. We've seen plenty of small-cap companies promise a lot with their patents, only to struggle with commercialization. Today's price action tells us that while the patents are a win for the long-term portfolio, the immediate liquidity needs and the sell-the-news mentality of short-term traders are currently winning the tug-of-war. When you look at the broader landscape of online investing and self-investing, many people are turning to platforms like Robinhood or SoFi Invest to find these high upside plays. If you're using a Fidelity trading platform or an interactive broker's account, you might have noticed the massive volume spike in DVLT over the last few trading days. We're seeing trading volumes that dwarf the daily averages, which suggests that institutional eyes are starting to peek through the curtains. In fact, recent filings show that big names like UBS Group and Barclays have been adding shares to their portfolios. This creates a fascinating tension. On one hand, you have major institutions building positions, perhaps seeing the long-term value in the company's information data exchange and its ability to turn name, image, and likeness into tokenized real-world assets. On the other hand, you have insiders, including the CEO, who've been offloading shares over the last 6 months. It's a classic expectation versus reality trap. The expectation is that if the company is about to explode, insiders should be buying. The reality is that these executives might be managing their own liquidity or diversifying, but for a retail investor sitting at home, that divergence can be a massive red flag. The financial health of Datavault AI presents another layer of this puzzle. Back in mid-November, the company reported its third-quarter earnings, and frankly, the numbers were a bit of a mess if you only looked at the surface. They missed earnings per share estimates significantly, reporting a loss of 33 cents per share when analysts were looking for something much narrower. Typically, a miss of that magnitude would be a death knell for a penny stock, but then the company did something that shifted the narrative entirely. They raised their 2026 revenue guidance from $50 million to a staggering $200 million. That's a 400% increase in their forward-looking outlook. They're betting big on the idea that their exchange of exchanges model and their acquisitions will start bearing fruit very quickly. This is where the smart investor has to decide if that guidance is grounded in actual contract pipelines or if it's an ambitious target meant to keep the stock price afloat during a period of heavy losses. If you're managing your own individual brokerage or using a SoFi robo-advisor, these are the kinds of speculative bets that require a high degree of risk tolerance. Let's look at what Datavault actually does to understand why that guidance is so high. They operate in two main divisions, acoustic science and data science. The acoustic side involves their WiSA technology, which handles wireless high-definition sound. While that sounds like a consumer electronics play, they're actually moving that technology into robotics and industrial signage, using sound to transmit data. The data science side is where the real big bet lies. They're using blockchain and AI to create digital twins of physical assets. Think about a hockey star like Jeremy Roenick, who recently joined them to monetize sports data. They're trying to create a world where your data, whether it's your health records, your athletic performance, or your creative work, can be valued as a real-world asset and traded on a secure exchange. The total addressable market for data monetization is expected to hit $7 billion this year, and the tokenized asset market could be worth trillions by the end of the decade. The expectation is that Datavault is a ground floor opportunity in a massive new industry. The reality is that they're currently losing millions of dollars a quarter and have a net margin that is deeply in the red. For those of you navigating investing sites or looking for investment help, it's important to remember that companies like this often live and die by their next capital raise. The CFO has stated that they don't feel pressured to raise cash for multiple years because of a recent strategic equity investment from Silex. But in the microcap world, no pressure can change into urgent offering very quickly if revenue doesn't scale as planned. This is why the technical levels on the chart are so critical right now. Staying above the $1 mark is psychologically important for NASDAQ listing requirements and for attracting more conservative investors who might be using Fidelity Wealth Management or Schwab Intelligent Portfolios. When a stock dips into the 90-cent range, it enters a no-man's land where it can easily be pushed around by small retail orders or aggressive short sellers. The volatility we see today, with the stock moving from over $1.20 down to 94 cents, is a clear sign that the market is still very undecided. Comment below how many shares of DVLT you currently hold, or if you're waiting for it to stabilize before jumping in. The institutional activity we mentioned earlier is perhaps the most bullish signal in an otherwise murky sea. When you see names like Merrick's Group or UBS putting capital into a sub-$1 stock, they're not looking for a quick 5% gain. They're likely looking at the patent portfolio and the exchange of exchanges architecture as something that could be acquired by a much larger tech giant in the future. We've seen how companies like Apple or Microsoft often buy up smaller firms just for their IP. If Datavault truly has the secret sauce for secure, quantum-resistant data monetization, they could be a prime acquisition target. But again, the reality for the individual investor using a Robinhood app or a Fidelity mobile app is that you have to sit through the gut-wrenching volatility of 3% daily drops while you wait for that long-term thesis to play out. It's not like holding a blue-chip stock where you can just set it and forget it. This requires active monitoring and a clear understanding of your exit strategy. Looking ahead, the catalysts are clearly defined. We have the upcoming distribution of the Dream Bowl meme coin tokens on December 24th, which is a bit of an unconventional move for a serious tech company, but it highlights their focus on the Web 3.0 ecosystem. Then we have the fourth quarter earnings, which won't be out until March of next year. That leaves a massive window where the stock is going to be driven almost entirely by news flow and sentiment. If they announce more licensing deals, like the one they have with the World Boxing Council, the price could easily test those $2 levels again. If the news goes quiet, the gravity of their current losses might pull the price back down toward the 52-week lows of 25 cents. It's a high-stakes game of show me the money, where the company is promised $200 million in revenue, but is currently bringing in just a few million a quarter. To wrap this up, Datavault AI is a classic case of the expectation of a future tech giant clashing with the reality of a struggling microcap. The patents issued today are a massive step forward for their intellectual property, yet the price action suggests that the market is tired of promises and wants to see the actual revenue hitting the balance sheet. We see a company that is successfully attracting institutional interest and high-profile partnerships, but one that is also seeing its own insiders sell shares while the stock price remains in penny territory. Whether you're using SoFi Active Investing, Fidelity IRAs, or just experimenting with fractional shares on a Robinhood stock trading platform, the lesson here is of extreme caution. The guidance for 2026 is incredibly bold, and if they hit even half of that target, the current price of 94 cents will look like the steal of a lifetime. But if they miss, or if they're forced into another dilutive capital raise, the path back to the IPO highs will be a very long and painful one. The central insight here is that the market isn't buying the story yet. It's waiting for the data to back it up. We've moved past the phase where a simple AI or blockchain headline can sustain a rally. Now it's about execution. And for Datavault, the clock is ticking to prove that their $200 million vision is more than just a well-crafted projection. It's a fascinating case study in market psychology and how even the most promising technology has to survive the brutal reality of the